drilling down on implied volatility and how to make it work in our favor. If you had no trouble understanding the idea of implied volatility, you won't have any trouble with IV rank or IV percentile. We use the IV rank and the IV percentile to put implied volatility into perspective. They are important to look at, because they tell us when an underlying options market may have a lot of premium compared to the price of the stock, or when the IV may be low. Just looking at the IV isn't enough, because some underlyings have an IV that is always high or always low. By the way, have you hit the like button, or subscribed yet? If we don't know what's going on, we might think that an underlying has a very high IV when, in fact, it's at its lowest IV for the year. Imagine going on vacation to the ocean. The tide will rise and fall over the course of a year. If you only spend one day at the beach, you won't know what the tide level means. It could be high or low, but since you can't compare it to anything else, it seems normal to you. Now imagine you've been there for a week, a month, or a year. You can easily tell if the tide is high or low right now because you can compare it to past tides. This is exactly what IV rank and IV percentile do. They compare the current IV to some time in the past, usually 1 year. IV rank is a very simple equation. It is just a number from 0 to 100 that shows how high the IV level is right now. Over the course of a year, the low IV is set to 0 and the high IV is set to 100. We figure out the rank of our current IV by taking the 52-week low, and subtracting it from the current IV. We then compare this number to the range of IVs that the underlying has seen over the past year. By the way, your trading platform will do all this for you. If the current IV is lower than the 52-week low, we know that the IV rank must be 0 right now because the current IV is setting a new low. The IV percentile is a much smoother way to figure out where high or low IV opportunities may be. Because of this, it is a more accurate way to tell where high or low IV opportunities may be. The main problem with IV rank is that one-day changes in IV can change the range of IV rank and, by extension, how sensitive IV rank is within that range. Because of this, changes in IV over the course of a single day can have a much bigger effect on IV rank and the calculation than on other days. The IV percentile gives each day the same weight, and counts how many days the IV was below the current measurement. Since the calculation is based on the number of days before, not the exact value, a big jump in IV would only show up as a small blip on the IV percentile calculation. Because of this, the IV percentile is much smoother, and when we see very high or very low IV percentile ratings, it is easier to tell that we are at an extreme value. When IV rank is over 50, we usually like to sell premium. By the way, have you hit the like button, or subscribed yet? The higher this number is, the higher the implied volatility compared to the rest of the year will be. This may provide an opportunity to sell at a higher price or to buy or sell a stock using short options on a low-cost basis. When the IV rank is well below 50, it usually means that the premium isn't too expensive, and we could wait for a better time to sell options. It's even better to wait for IV rank to reach extremes, because a rank of 50 is neither extremely expensive or extremely cheap. You can also use the IV percentile, but it's important to use only one or the other for consistency. If we keep switching from IV rank to IV percentile, it's harder to see how implied volatility changes over time. Final note: I use TD Ameritrade's Think or Swim trading platform. As far as I know, they only use IV percent, or at least they call it IV percent. I can't guarantee what math algorithm is behind it. I can say, however, that it does work well for finding higher premium opportunities. Thanks for watching. Please leave a comment or question below. Click like and subscribe.